Hi everyone, my name is Lydia, the Fun Finance Queen, your money mentor online. Thank you so much for hopping onto my YouTube channel today as I talk to you about lifestyle creep. All right, what is lifestyle creep? Lifestyle creep is what happens when your spending increases with your income. It's what happens when your spending increases with your income. And ladies and gentlemen, this is actually normal. It happens slowly and unintentionally, but it is something, as your money mentor online or your coach, I want to encourage you to take notice of. It's so easy to ignore. So think about this. Many eons ago, when I was 16 or 17, my first job was a food sales assistant. I worked for an agency and I would serve out food. So, as people came for lunch, I would be the person, the dinner lady, who would hand out, your hash browns or whatever you were having. And at that time, I remember being paid £3.50 an hour. I know. So, but obviously, way back then, that was what was being paid. But think about it now. Now, I'm a project manager. I used to work in Silicon Valley. So, of course, I don't earn £3.50 an hour anymore. But realistically, my income has grown pretty significantly since that time. The difference, though, is that I didn't remain on the lifestyle of someone who was earning £3.50 an hour. For example, I lived with my mom at the time. We lived in Southeast London. I shared a room. All of those things were things that I needed to do at the time because that's what I earned. But obviously, I've gone on, I've gotten married, I have 3 children, and guess what? £3.50, I would not open the door for, open one eyelid for in the morning, right? But of course, this is something that we all do to get started. So bottom line, has my lifestyle changed since that time when I was making £3.50 as a food sales assistant? Yeah. But have I been able to control that lifestyle creep and manage my expenses so I don't grow to a point where I'm overspending? Because what tends to happen is that, you start making, you leave college, right? And you start making X amount of money and you think, oh my gosh, I've got money, and you start spending out of control. I'll give you an example. A good friend of mine was training as a doctor, and she was in the United States. And at the time, doctors in training were paid $40,000. Okay? Now, when that person graduated, that person started making $350,000 a year. Okay? So within 1 month, that person went from making $40,000 a year to making more than $40,000 a month. Okay? But the thing that captured me the most was when I spoke to that person and they said to me, I need to talk to you. I'm spending everything I make. And I'm like, how? Lifestyle creep. Lifestyle creep. You feel as though you're making more so you can spend as much as you like without control. And this, ladies and gentlemen, is what I'm here to encourage you not to do. It doesn't mean that because your income goes up, you have to spend all of it. So let's talk about lifestyle creep. So, signs of lifestyle creep, let's talk about that. What I've noticed in terms of what causes your lifestyle to creep up is when you see things that are like luxury items as a necessity. So for example, if you feel that driving a Jaguar is necessary because you're making 40,000, I have to question you, is that lifestyle creep? Or could you have actually got on with a better car, like an Audi or something that, I don't know, I'm not too good on cars, but could you have actually chosen a car that is still a nice car, but not as expensive as that high-end luxury item, right? So when you start seeing aspirational luxury goods as necessities, ladies and gentlemen, that is definitely lifestyle creep. Okay, another thing that is a sign of lifestyle creep is when at the end of the month you look at your account and you have no idea how you spent the money. That means that you are spending unchecked. And because your income is not unchecked, your employer has limited your income to a certain amount. Even if you're a salesperson, you can only make X amount of money based on how much you sell. The reality is that we need to get to a place where we're not spending money unchecked, especially if it's because we're thinking that we're making so much more. It's very easy to go through money when you're not checking it. So guys, please pay attention to that, okay? And remember, if that spending gets out of hand, what happens? It means that you don't have money to put into your emergency fund, you don't have money to put towards your pension, you're not saving so you can invest. And guys, that is everything that I talk against, right? So super important, make sure that you're not spending in an unchecked manner. Now, the next thing that is a sign of lifestyle creep is when you get comfortable with increased expenses rather than alarm bells ringing, okay? So for example, during this cost of living crisis, I was alarmed when my gas bill went up by twice as much as what it was before, 3 times actually. I was significantly alarmed. That really put alarm bells in my head. If you did not notice that, that is a question. How come you missed it? How come you're not noticing that the price of food has gone up pretty significantly? A friend of mine who is an accountant very quickly realized that, oh my goodness, going to Sainsbury's, for example, was costing an arm and a leg. And he and his family made that switch very quickly to a discount store like Lidl or Aldi, just to be able to manage those food expenses for a family of 5. So super important, pay attention, and alarm bells should go up if you notice that your costs are going up. If you're not noticing, that's the problem, okay? Now, let's talk about how we can potentially avoid a lifestyle creep. So this is important to me. We have to be able to avoid it based on the following. First of all, you got to pay yourself first. Now, this is something I talk about all the time. Now, I'm going to put a video here that you can actually go to that explains how you can go about paying yourself first. What does it mean? It means that when your paycheck hits your bank account, you have to have somewhere within that budget or of those expenses that actually says, I'm going to put this into a savings account for myself. It could be a pensions account, it could be something, but give yourself evidence that you worked by having savings. It could be any kind of account. It could be a high yield savings account. It could be a pensions account. It could be an ISA. It could be wherever you choose to put that money. That is you saying that I worked and I have evidence that I worked and I've done something for myself. That's paying yourself first. Check out that video that I mentioned before and make sure this is something that we make into a habit, especially as your income might go up. Okay, so the next thing that I want to recommend is that you also automate your savings or investments. Automate it meaning create a direct debit. Put that money into that savings account automatically so you don't have to manually do it. I like to manually do it because I want to encourage myself, right? But you do have the option not to do it manually and automate it. If you're saving towards investments, put that money into that investment account automatically. So it doesn't actually feel as though it happened. The money never came into your hands in the first place, so you don't have anything to worry about. Automate it so you don't have to think about it, okay? So automate it. Now the next thing, of course, that I want to encourage you to do is create a budget and stick to it. My encouragement would be is if you get a raise, first and foremost, split that raise into half. So if you used to get paid £100 and then you went to getting paid £200, split that raise of an extra £100 into half, £50, okay? So 50% of your raise you want to allocate, okay? That is super important. Take it, put it towards investments, put it towards something that will actually benefit you and increase your financial security. Now, remember guys, if you put it towards a car depreciates in value, whereas there are other things that appreciate in value. Find the things that appreciate in value that could add to your growth. All right, how else do we avoid lifestyle creep? Set goals and track your progress. Set goals and track your progress. Guys, I did another video on goals and how to make sure that they're smart and they're trackable. Trackable is very important. Track your progress. So for example, you could decide, I want to increase my emergency fund from a 3-month emergency fund to a 6-month, or a 6 months to a 12 months, wherever you are in life. Or I want to create one if I don't have one. Okay, there's a video here about emergency funds that I really want you to pay attention to. It's one of the first ones I did. So guys, I was a little green, I get it. But do pay attention and watch it and see what it was all about. Another thing you can do is increase your pension contribution. Okay, typically I think the minimum pension contribution can be, 1, 2, 3%, whatever the case may be. Try to take it up, maybe make it 4% or 5% if you can. Another way you can avoid lifestyle creep is by increasing your savings target. So it could be, for example, that, okay, normally you save £40 a month or £50 a month. How about you decide, okay, I'm going to take it up to £55 or £60 a month. That way you're actually growing your revenue, or probably from interest, rather than pouring it down the drain. Another thing you can probably do to avoid lifestyle creep is limit the amount of loans or credit card debt that you have. Why? Because if you get a raise and you spend it on something that costs you 24% interest, at that point I have to ask the question, did you get a raise? Actually, no. You lost your raise to the credit card company. So this is super important for us to pay attention to. Open your eyes, guys. I have a friend who's from Nigeria who would say, shine your eyes. Pay attention to how you spend your money. Pay attention to how money leaves your account so you can avoid lifestyle creep. All right, so let's say you got a raise. How are we going to avoid lifestyle creep when you get an increase in your income? So what do? Well, I touched on it very briefly and I want to touch on it again. If you get a raise, split it in half, okay? First of all, take the time to calculate the difference between your previous earnings and your new amount of earnings, okay? So, like I said, let's say, for example, you earn £1,000 a month, okay? Good for you. And you got a raise of £200. That's a 20% raise. You've got to be pretty amazing to get that. But then you decide, okay, I'm going to take that £200 raise, after tax maybe, and I'm going to then split it into two. So you split it into two, you have two sets of 100. This is what I would recommend that you do. I would recommend that you take 50% of it and set it aside and give yourself that 50% raise, okay? You don't have to do this. If it's a small raise, that makes sense. But if you got a massive raise, ladies and gentlemen, of course not. Just be realistic here. But make sure, what I'm trying to say is make sure you set aside some money for yourself so that you can actually not feel deprived. This is so important when we're on this financial journey because, like dieting, if you stop eating and you say, you go on a veggie juice fast or something, the moment you stop that fast, you're most likely to actually increase your intake. And that's what I'm trying to avoid when it comes to your financial diet. I don't want you to diet financially and then one day you go binge and spend everything you saved. Not what I'm hoping for. So every time you get a raise, set aside a little portion for yourself to say, yes, this is my blow money, which is what I like to call it, money that you can blow. That's my blow money and I earned it. I have the right to spend that. And that takes away that feeling of being deprived, okay? So we're gonna split our money and we're gonna set aside some blow money. That's great. Okay, if you don't have an emergency fund, start one. We're talking about what happens when your income increases. If you don't have an emergency fund, now is the time to start it, okay? If you have an emergency fund, strengthen that emergency fund when you get your income raise, okay? Take the time and make sure that you do something. I don't care if it's £20 a month extra. Do something towards growing that income that you're setting aside for yourself. All right, what else can you do? Pay down debt. If you have outstanding debt on credit cards or on a loan and you get a little bit of extra money, another option that you can do is actually pay down some of that debt. You didn't see that money anyway, it just came out of the blue. Don't blow it all. Take the blow money, set it aside, but then maybe pay down some debt so you can stop paying 25% interest, okay? What else can you do? You can spend some of it on yourself. You can add to your retirement fund. Those are two things that I think are really important. Add to your retirement fund if you have one. If you don't have a retirement fund, ladies and gentlemen, please start one. If you don't have a retirement fund, this is so important. I don't think national insurance is going to be enough to cover everyone as we get older. So have something that talks or that speaks towards the fact that you are planning towards your retirement, okay? And of course, like we said, spend your blow money, that portion of your raise, on whatever you want. This, ladies and gentlemen, is money that you earned. And you need to be able to say, yes, I did it, I earned it, I'm going to be thankful for it and enjoy it. I don't care if it's a cup of coffee. I don't care if you go out for a meal by yourself. Do something to celebrate that and then put the rest of it aside. Okay, so in conclusion, what am I telling you? I'm telling you that to avoid lifestyle creep, you have to be intentional about your money. This is something I say all the time. Personal finances are personal. Take time and make sure you understand your situation and then be intentional about how you spend your money. You worked for it. You earned it. Take the time to be intentional about how you spend it. Okay. Be okay with living on half of a raise or a portion of a raise. That's a mindset thing. It doesn't mean because it comes in you got to blow it. I say this to my children all the time. Take some time and understand the mindset that's required to say, okay, I will live on a quarter of that raise and I'll put the rest of that aside, right? That's not a bad thing. That's a good thing. And it's a strong mindset that you and I need during this cost of living crisis. All right. You also need to be able to decide to have a mindset that embraces financial security rather than retail therapy. So guys, I kid you not, I love to go to the local mall more than anyone else. But the one thing I'm capable of doing is going in with a budget and sticking to it. Okay? Retail therapy is so much fun, but it's not fun when you've still got to pay for it 6 months later. Okay? So embrace that mindset of financial security rather than retail therapy. So, ladies and gentlemen, I know that was quite a bit of a mouthful for everyone, but lifestyle creep is real. And if we can actually counter lifestyle creep, it takes us to a stronger place financially and a better place financially. I hope this helped somebody today. Of course, if you have any questions, please put them in the comments below. And if you have experienced lifestyle creep and want to share that with us, please put that in the comments below as well. All right, so before we go, as usual, I ask only a few things of you. The first one is that you like this video. The second is that you subscribe to my channel. And the third, of course, is that you share this video with someone who you think could benefit from it. Ladies and gentlemen, thank you so much, and I'll see you on the next video.